by SK Sharma. He wants to know if mutual funds are required to pay taxes on the dividend received from the companies they are invested in, and what is the reason for that?
No, mutual funds do not pay taxes. In fact, last 2 years back, before that it used to be, but it was not unique to mutual fund. In fact, there was a dividend distribution tax, which was levied on all dividends paid by companies to all investors, whether it be individual investors or mutual fund. So if I hold a company stock and it is giving some dividend, the dividend distribution tax will be deducted by the company and deposited. And my dividend in my hand will be tax-free. Likewise for mutual fund. Now it has changed. Mutual funds get all the dividends and there is no dividend distribution tax. And they don't even, mutual funds is a tax-free entity. Mutual funds don't even pay long-term capital gains or short-term capital gains. In fact, that is one of the biggest advantages of investing in a mutual fund. If you invest in a stock portfolio yourself, and depending on the transactions, if you sell something very quickly, which is less than 1 year old, you'll be liable for short-term capital gains. The money which you hold it for 1 year and more will be liable for long-term capital gains. Not in case of mutual funds. Mutual funds don't pay any taxes. All the taxes are paid by the investors depending on his holding period in his hands. So if you hold a debt fund for 3 years, it will be treated as long-term capital gains and it will be taxed at, marginal rate. Not at your marginal rate, but after indexation, 20% of the gains will be taxed. Before 3 years, it will be taxed at your marginal rate. In case of equity, less than 1 year, the tax is, short-term capital gains tax is 15%. For holding of 1 year and more, the long-term capital gains tax of 10%. So now investors pay all the taxes, not mutual fund.